1 out of every 9 XRP available on the open market effectively vanished yesterday. Welcome back to XRP Daily Brief. Today we're going to break down what is happening with the XRP supply, why exchanges are draining so fast, how ETFs and institutional desks are quietly tightening liquidity, and what that could mean for XRP's price over the next 12 to 24 months. We're going to talk about ETFs, OTC desks, liquidity squeezes, DTCC requirements, and what sufficient liquidity really means for a digital asset like XRP. No charts needed. I'll walk you through the numbers step by step. Let's get into it. 1. What just happened to XRP on exchanges? Yesterday, about 6.5 billion XRP disappeared from exchanges. That's roughly 1 out of every 9 XRP that was available for trading on centralized platforms. Not over a few months, not over a year, in a single day. Balances on major exchanges dropped in near perfect synchronization. We're talking about around 50% reductions on many leading centralized exchanges at the same time. This isn't normal retail behavior. Retail investors don't coordinate billion XRP withdrawals across multiple platforms in one day. This looks like the largest coordinated XRP outflow event in crypto history. Something big is happening behind the scenes. 2. Massive outflows, exchange by exchange. Let's break down what this meltdown or reshuffle looks like in plain language. On-chain data shows one of the largest synchronized balance drops across major exchanges worldwide, not just in the US. Upbit, huge outflows. Binance, about 2.56 billion XRP gone. BitHum, around 777 million XRP withdrawn. Uphold, eToro, Bitbank, roughly 50% reduction each in their XRP balance. When you see these kinds of numbers, it means one thing. XRP is leaving exchanges at an insane rate. Now that can happen for several reasons. Large buyers purchasing XRP and moving it to self-custody cold storage rebalancing, by exchanges OTC deals being settled and reflected on-chain, big internal reshuffles between custodians, desks, and platforms. Realistically, it's probably a mix of all of the above. From the perspective of a long-term XRP holder, this is the type of thing you actually want to see. Because as liquid supply on exchanges shrinks, it becomes harder and harder to keep the price suppressed if demand stays the same or increases. When there isn't much XRP left to buy on open markets, the only direction the price can realistically move in is up, assuming demand continues. 3. Is this just hype or a true supply squeeze? Nearly every major exchange saw around a 50% drop in balance, which strongly suggests large-scale user withdrawals and possibly institutional-sized movements. Some possibilities: migration to self-custody and long-term holding exchanges, moving funds to cold wallets, or regrouping addresses. OTC desks sourcing liquidity from the exchanges to satisfy big buyers, including ETF providers. Internal on-chain reshuffles that don't immediately show up as price action. We also see some bright spots. Certain platforms report net inflows, with hundreds of millions of XRP moving into their systems. One exchange even shows a bizarre sudden spike, likely an address reclassification, or them finding balances in a previously unmapped wallet. But if we zoom out, the big picture is clear. Earlier this year, there were around 16 billion XRP sitting on exchanges. Now we're closer to 6.5 billion. That's a drop of more than half in a relatively short period. Something major is happening with liquidity. For ETF accumulation and OTC desks, the hidden battlefield. Let's talk ETFs, OTC, and why you're not seeing this reflected dramatically in the price yet. ETF providers don't usually go and buy millions of XRP directly on the spot market where everyone can see it and front-run it. They work through OTC desks, private over-the-counter deals with institutions and large holders. Here's the problem. Those OTC desks are not magical. Their XRP has to come from somewhere. As ETF demand grows, OTC inventories start to shrink. Once those OTC pools get low, the desks have to refill. And where do they go? They go to big exchanges like Binance, BitHum, and others that still have large XRP reserves. So even if the public price doesn't move drastically in the short term, a lot of the action is happening in the back channels, away from the spot order books. That's why you don't necessarily see a giant green candle every time billions of XRP move. But there is a limit. If ETFs and institutions keep soaking up hundreds of millions of XRP, at some point, you simply can't hide it anymore. The spot market will start reacting as available supply disappears. 5. How fast could the visible supply be drained? Let's look at some rough projections. At current accumulation rates, if ETFs and large buyers keep absorbing 500 million to 1 billion XRP per month, then the visible exchange supply could be heavily depleted in about 12 to 24 months. That does not mean the entire circulating supply disappears. There will still be long-term holders in self-custody, whales, ripples, escrow, but it does mean that the easy, liquid, instantly available XRP on exchanges becomes extremely scarce. The path isn't toward no XRP left in existence. The path is toward a structural liquidity squeeze, where price has to adjust higher to convince holders to part with their coins. We're not talking about no XRP left, we're talking about no cheap XRP left. 6 Ripple, escrow, and legal constraints. Now what about Ripple's escrow? Ripple releases 1 billion XRP per month from escrow, but that doesn't mean they just dump it all on the open market. There are also legal constraints. Because of court rulings, Ripple cannot simply sell XRP to certain types of institutional investors in the United States the same way it did in the past. There are restrictions on how, where, and to whom they can sell. Could entities outside the US still access XRP from Ripple? Yes, that's possible under certain structures, but it's not as simple as Ripple floods the market. So while escrow exists, it doesn't automatically solve a global supply crunch in a clean, direct way, especially if demand is exploding through regulated products like ETFs. Ripple is also highly strategic. The people there understand exactly what a supply squeeze means. They're not likely to blindly crash their own asset by panic selling into growing institutional demand. 7 current ETF footprint and exchange levels. Let's give some context with approximate figures. Current US spot XRP ETFs already hold hundreds of millions of XRP, around 0.5% of circulating supply after a short time of trading. Net inflows are in the hundreds of millions of dollars, with assets under management also in that range. Binance's XRP reserves, for example, are sitting at multi-year lows, around a few billion XRP, and trending downward. Analysts are increasingly warning about a supply crunch. ETF demand, long-term accumulation, OTC sourcing, plus self-custody trends. All of this together is pushing the market toward a point where exchanges may simply not have enough XRP to keep prices stable at current levels. If the pace continued at 500 million to 1 billion XRP per month, then within roughly 12 to 18 months, the easy exchange supply could be mostly exhausted at these prices. And that's before you consider scenarios where larger players like BlackRock, Fidelity, or Vanguard expand their XRP exposure or launch additional products. In those scenarios, the timeline could compress even further, or the price would likely have to move sharply higher to restore balance between supply and demand. 8. What happens to price in a true liquidity squeeze? If exchange balances drop below, say, 1 billion XRP globally, the market changes character. At that point, you don't need massive flows to move price. A relatively modest wave of buying can push XRP sharply higher because the order books are thin. In those conditions, it's not unrealistic to see sudden, aggressive repricing. Double-digit XRP prices become plausible: $20, $30, $40, and beyond if demand and narrative align. You can even get short-term spikes to extreme levels on certain exchanges if liquidity gets fragmented. a phenomenon we've already seen in the past when XRP briefly printed shock prices on specific platforms. Could XRP ever wick to $90 or $100 in some crazy illiquid moment? In a true liquidity crunch with fragmented order books, we've already seen weird prints. It's not impossible. Sustaining those levels is another story. But the point is, the thinner the books, the more violent the moves. 9. Who actually sells in that scenario? Once most of the exchange inventory is gone, where does new supply come from? It has to entice long-term holders, retail holders who have self-custodied for years, large whales institutions that have built strategic positions. These are not the people who panic sell at $1.50. These are the people who start asking, do I really want to sell at $20? Am I willing to part with my XRP at $50? If I hold for 10 to 20 years while real-world adoption grows, could it go much higher? If an institution holds 1 billion XRP and the price is $50, that's $50 billion. Are they going to dump everything hoping for a short-term gain? Or are they going to treat it as strategic financial infrastructure for decades? Many large players are likely thinking in 10, 20, 30-year horizons, not quick flips. That's why the group most likely to lose in a major repricing event is often retail, selling too early because they don't have the full picture. 10. DTCC, sufficient liquidity, and where XRP fits. Now let's connect this to something more traditional. The DTCC, the Depository Trust and Clearing Corporation, the world's largest clearinghouse. DTCC has been very clear in its digital asset and tokenization research. They will only seriously adopt digital assets that have sufficient liquidity. But what does sufficient liquidity actually mean? It doesn't just mean high market cap or high spot volume. In this context, liquidity means enough high-quality liquid resources to meet all payment obligations on time, even if the single largest participant defaults under extreme but plausible stress scenarios. This is often called the Cover 1 standard in U.S. clearing rules. We're talking about same-day, intraday, multi-day settlement capacity, not just speculative trading. To satisfy that, DTCC focuses on things like cash central bank reserves, highly liquid government securities, committed credit lines, and now increasingly, tokenized treasuries and other high-quality tokenized assets. In its pilots, DTCC has used tokenized U.S. treasuries as the primary digital collateral. Now, ask yourself, which networks are actively working on tokenized treasuries and institutional-grade settlement? One of the ecosystems heavily involved in that space is the XRP ledger, through partners working on tokenized treasuries, stablecoins, and on-ledger representations of real-world financial instruments. 1.1 XRPL, stablecoins, and multi-currency infrastructure. The direction is clear. The new financial infrastructure is moving toward stablecoins, tokenized deposits, tokenized government debt, real-time 24/7 settlement across multiple currencies. On the XRP ledger, we already see euro-backed stablecoins, real basket or fiat-backed stablecoins, planned products like RLUSD and other currency representations, the possibility of yen-backed and other region-specific assets. This creates a global, always-on settlement fabric where you can move value across different currencies and jurisdictions instantly. XRP itself sits in the middle as a bridge asset, highly suited for cross-currency settlement, especially when the rails around it, stablecoins, treasuries, tokenized assets, are building on the same ledger. On top of that, technical architectures from DTCC and others have already discussed compatibility with multiple public chains, explicitly including the XRP ledger among other major networks. That doesn't mean DTCC is currently settling in XRP. It means their systems are being designed to interoperate with these networks when regulation, demand, and liquidity align. XRP is positioning itself in that conversation. 1.2. So where does this leave us? Let's zoom out and summarize. Exchange balances are collapsing. From around 16 billion XRP earlier this year to about 6.5 billion XRP now. Massive outflows in a synchronized pattern suggest large withdrawals, institutional reshuffles, ETFs and OTC desks quietly hoovering up supply. ETF holdings are already in the hundreds of millions of XRP, with the potential to scale much further. At current accumulation rates of 500 million to 1 billion XRP per month, visible exchange supply could be squeezed dramatically over the next 12 to 24 months. Ripple's escrow and legal constraints make it unlikely that they will, or even can, simply flood the market with cheap XRP, especially to U.S. institutions. A structural liquidity squeeze doesn't mean no XRP exists. It means the market has to offer a much higher price to convince long-term holders to sell. In parallel, the traditional financial world, clearinghouses, tokenized treasuries, institutional pilots, is moving toward exactly the type of infrastructure that XRP and the XRP ledger are being built for. 13 final thoughts, and what to watch next. If this trend continues, exchange balances keep falling, ETFs keep accumulating, OTC inventories keep thinning. Then at some point, price has to reprice higher to match reality. It may not be a smooth, gentle climb. It may be sharp moves, sudden gaps, and violent squeezes as thin order books get stress tested by real demand. Your job as an XRP holder or observer is not to predict the exact day or dollar level. Your job is to understand the mechanics, shrinking supply, growing institutional demand, regulatory clarity slowly improving real-world infrastructure being built around XRP and its ledger. Here on XRP Daily Brief, we'll keep tracking exchange balances, ETF inflows, OTC behaviors, and the evolving role of XRP in institutional settlement and tokenized finance. If you found this breakdown helpful, make sure you stick around for the next brief. Things are moving fast, and this is only the beginning of what a full liquidity squeeze could look like for XRP. Thanks for listening, and I'll see you in the next XRP Daily Brief.